Okay, good afternoon, everybody, and welcome to the weekly Gary's Traders Group. It is Monday, October the 6th, a little after 4 p.m. in the afternoon. I want to welcome everybody on board. And before I get started, I'm going to apologize in advance. I've had a horrible cold over the weekend. I was really contemplating whether or not I was going to have this today because I literally am without sleep for 2 days, and I don't know if you guys have experienced that virus type of stuff that goes around, but boy, I'll tell you, it just absolutely knocked me out. Tons of chicken soup, vitamin C, and everything else. So I'm going to apologize in advance if my voice gets a little crackly, and I'm going to try to uh, get through everything without losing my voice and be able to give you all the information I've come up with. So let's get right into the disclaimer. This webinar is for educational purposes only. I'm not a licensed representative for giving trading advice. Trading does involve risk. These webinars are designed to educate you and inform you and train and teach you and helping you to make intelligent decisions throughout your trading day. Okay. With that said, let's go right to the micro picture. Get to, well, actually, let's do the macro picture first. Oh, and before I get started, for someone, Dennis, who is not able to attend today, he did ask me to just go a quick question, a very simple question, which was how long do you re-index the data for on best choice? Because my original training tape that I did back in 2011 said to re-index for 6 months, but I omitted to say in that training tape that was specifically and only for creating a specific user list using the criteria that is developed back in 2010 by Chris Galchek and Peter and myself and a couple of other people are still on board, and that's these two conditions here. Number of extreme crossings, which simply relates to how many times does the stock go from one extreme to the other and back down. And this condition here, velocity changes of extreme crossing. These are two great conditions that when used with the basic conditions, we'll find a lot of volatile stocks for directional trading that just, fly up and down, or for channeling stocks if you want to have channeling stocks that go up and down. But the reason for reindexing for 6 months is to create this specific user list, because the number of extreme crossings directly relates to how long you re-index for. So if you're going to create a list using these two short-term conditions, I hope can everybody see the conditions I'm talking about? Yes, no? Okay. These two conditions right here. Forgive my bad penmanship there. Those two are the conditions that you will use when you want to reindex for 6 months. And that's the only time you need to, Dennis. Otherwise, reindex, this is for everybody, but specifically Dennis asked me this question, and I wanted to address it right up front so it doesn't have to re-watch the whole webinar recording in order to get an answer to that question. It's only if you're creating the condition with these two, or the user list with these two conditions, will you reindex for 6 months, because it's the number of extremes crossings is directly related to how long you reindex for. Okay? So I wanted to go through that real quick and make sure that that was addressed right away. Another question that was asked by one of our members, and it was a difficult question to answer, and that is, how will the elections, be it it looks like the Republicans may win the Senate. And how will that affect the market, and which sector or stocks would be best to play off? That's a very, very difficult question to answer, Bob. I did some research a little bit on that. You know, if Republicans gain House, yes, there will be certain laws that perhaps will be created. They may create a lot more governmental bureaucracy. I don't know. I don't want to get too much into politics here because we all have our own view. I try to keep that and a lot of opinions that people will have about market futures out of these types of webinars, and really try to focus more on the technical analysis and best choice and seasonality, because that works. But so that may be, even though that may be, midterm elections usually are not good for stocks. There was a research study done by S&P Capital IQ. Hello? Can you guys hear that? Boy, that was weird. All good? Okay. I heard somebody with a chainsaw in the background. It was bizarre. Anyways, there was a study done by S&P Capital IQ that dates back for 70 years. And the S&P 500 had suffered its worst 6-month period of any 4-year presidential term in the second and third quarters of midterm election year. So, you know, there's some historical significance that kind of relates to the trading style of best choice and seasonal, cyclical, repeating things. And I think everybody on here will agree that the past tends to repeat itself. So, however, the S&P bucked the trend in the second quarter, gaining over 5% this year. So maybe this year is different, and it's due to the QE and the government propping up the market. But historically speaking, midterm elections are not good for stocks. I wanted to address that to you specifically, Bob, because you did ask that question. But as far as which sector and which stocks to specifically play, I don't know. I couldn't quite find a distinct answer to that. But I'll continue to hunt. And if I come up with something, I'll let everybody know. All right, hold a second, everybody. I've got a phone call coming in. Bear with me.
There are 11 other callers on the call.
Okay. Test, everybody hear me okay? Hello, hello?
There are 11 other callers on the call.
Hello, hello? Can you guys hear me? Hello? Somebody kind of chat in the box? Yes? Okay, good, good. Okay, short term. I'm sorry. A lot of it here today, so bear with me. Let's go to long term first, and then we'll go to short term. Some interesting things. We've had horrible, horrible volatility here in the last couple of weeks, and I think it's good to mention, and it definitely bears witness to the last 2 weeks, that this market is very volatile and perhaps sitting on the sideline until the game starts going one way or the other. It could be very smart for certain people, because be it long or short, you're getting whipsawed all over the place here in the last couple of weeks. It's just evidenced by 250 points up and then down and up and down. It tested the 61.8 retracement on the Dow. It busted through that. And again, this is using a 3-month Fibonacci retracements on everything. 6 months, this would have bottomed right here, would have been a 50% retracement on the Dow. Is it over yet? I don't know. I mean, this is not in the real oversold area like it would be back here in August, where, it was down at the bottom of linear regression and just really popped up. The DPO, the detrending price oscillator, is just zigzagging up and down. It's even more evident here in the S&P 500. S&P 500 is starting to get more oversold, as is the NASDAQ. The NASDAQ has really pulled down hard here. However, if you blow this up a little bit, can you guys see this area here? Maybe if I get rid of the MOBO coloring, you'll be able to see what I'm talking about a little bit. Get rid of the cloud just for 1 second. Okay, there. The gold line crossing the blue line. This is I believe that's an 8. It may be a 10 crossing a 20 or an 8 crossing a 21. This is a 10-20 study, so I would imagine this is, the 10 crossing the 20. It's the original moving average crossover that we used to use. It's a little bit more lagging, but it's a little bit more confirming than an 8 EMA crossing a 21 EMA, and that's a 10 EMA crossing a 20 SMA. That's happened here. And we do have kind of a doji starting to happen today. So I don't believe we're still out of the woods yet, is my point. And I think there is still some room for the market to continue its volatility as well as potential going down. And as you see, we went up today and we ended up down, and the NASDAQ, of course, got pummeled again. So using the DPO, guys, as an indicator, the MOBO DPO, it's very, very strong. It reacts quicker than a MACD. MACD is a classic. You can use an RSI. This is almost like using an RSI, but set instead of 70 and 30, like typical RSI is set defaultly. It's more like 85-15 when it's way up here and way down here, and there's a trigger, which really means a trend reversal. So I still think we still have some room, not much more, but I think we have some room still for the market to continue going down. Short term, what's happening in the news this week? Jobless claims on Thursday, but of course the big one is on Wednesday at 2 o'clock, and everybody waits to see what the Feds have to say in regards to rates and the rate policy. It seems that the general consensus is that they're not going to raise rates, and everything is going to be status quo. And are they starting to slowly pull out of QE? Well, yeah, they are, and they've been talking about this for a while, and the market seems to have started to build in that news, but will still react. So, be very, very careful of what happens on Wednesday, October the 8th, with the meeting. Okay, that is shorter term of what's happening in the market in regards to watching out. MSN has changed their look, just for a quick side edification. It's kind of neat. You can type in a symbol. For example, anybody belong to any big box stores? Anybody go to any big box stores? BJ's, Sam's Club, Costco. Costco, yeah, Costco, yeah. Yeah, I just because my friend buys her dog food there, and I guess they have a brand that is just as good as the one I've been buying at a specialty all-natural pet food store for my Great Danes. It cost me $82 for a 25-pound bag of dog food that they rip through 2 of those per month. And guys, that's $165 worth of kibble food. That doesn't include the ground beef that I cook up for them or the chicken that I cook for them. So I was looking at ways to save money. She turned me on to this brand at Costco, and it's 35 pounds. It's just as good. I've made the transition with them, and they're doing just fine. So I went in there this weekend to check out their meats, and they of course got huge chicken breasts for $4.99 that blow away Walmart or any of the chain grocery stores. They happen to have earnings coming out this week. Now, I need to run this by you guys because I didn't list this because I have mixed feelings. I've read a lot of information about it, and their model has worked fantastically since the 80s when it was started. However, it's becoming into an aging management. It's not keeping really in touch with a lot of the new stuff, specifically what's going on with Amazon and Amazon getting into the game and pushing their Amazon Prime more and more, which kind of appeals more to a younger audience. But I'll tell you something, guys. I went to Costco this weekend, and I couldn't find a parking space in the parking lot, for crying out loud. I mean, it was jam-packed. And, of course, I could easily skip lunch because I went to all the little good food little things, and they had lentil soup over here, and they had a sandwich over here. Heck, I fed myself. The samples, they were really, really good. But one of the things I wanted to do is I really did a comparison. I was looking at the demographics. I wanted to look at the age of the people that were attending. And it was kind of along lines of the articles I read. It's more designed for my age group, the baby boomer generation. There were some younger people there that had younger children. I was actually going to do a poll, but that's one of the concerns that people have about Costco and moving forward. And one of the things about earnings plays is a company, can hit their EPS, they can hit their sales revenue, but we all know from experience, it's that conference call and their forward guidance that's really going to make it or break it, whether the stock moves up or down. I looked at historically what Costco does, and it's a mixed bag as well. So I'm going to lay it out for you guys, and what we really want to do with it. I mean, I was amazed. Costco was packed. And even though the article said, well, you got Amazon Prime, you got people that are getting food delivered, and they've got a flat rate shipping, and their model doesn't really address the future, blah blah blah. But I'm thinking, hey, who controls all the wealth in the United States? The baby boomers do. We are the generation that is going to inherit the most wealth of any generation. And that's all the money that came from our parents in the Industrial Revolution. We control the largest segment of 401k money in the market. Heck, we got a baby boomer that's running the office again. Second time. I mean, so did JW. I mean, he was a baby boomer. So I really thought about that and said, you know what? We're the ones that got the money. We're still spending the money there. So maybe, I don't know. Got a 90% with a low rating, but that's kind of more towards the end of the month. Remember, always hit your puzzle piece. Make sure you've got good data and see if it changes this at all. See, that best rating of the whole zone still shows the end of the month. If I do best profit per trade, it will change this rating to 80%. Where is it sitting at right now? Oh, it's way up there. Costco has enjoyed a really nice run, you know, from $109 to 127 here in a 6-month period of time, sitting way, way up above linear regression, showing that earnings are decreasing, which is usually not a good sign. And when you do a little bit of fundamental research and say, well, what do the pundits have to say and the smart people in the world? Come on. Why is this not? There it goes. No. COST. But this is the new website, too, I was going to say, of MSN. It's kind of neat because it puts all the top stories here. And this is where I read some of the stuff. Some good stuff, bad stuff, different articles. I mean, it's a fantastically run company. It does say, you know, outperform as far as the analysts go. If you go to Yahoo and see what their analysts have to say, their estimates, not estimates, I'm sorry, opinions. It's a 2 between a scale of 1 to 5, which is a you know, as far as they're concerned. So I don't know, guys. If you take a look at open interest on this and if there's something there, I was really crossed whether or not I should even talk about this, but it's only because I belong to it. I joined it. I went there. It was packed. I thought about the different articles. I thought about baby boomers controlling the money and these kind of things, and I thought maybe it's worthwhile taking a look at. Unfortunately, they don't, you know, they got November, but November has got a mixed bag as far as interest goes. One of our members did tip their toe into it, talking about how they did jump on the ARK 127s, which, you know, yeah, folks, I mean, there's a lot of interest here, and you can buy it for pretty cheap. I mean, $126 stock, you could pick up for $1.35. I mean, what are we talking? 1.1% premium. The volatility is really just incredibly low. I mean, look at that. The IV is stupid low. November's the 130s. I mean, if you did the mathematics on this and said, okay, what if I ran with this best rating a whole zone? I did the 3.10. As far as a potential profit goes, 126.21 times 1.0310. Well, puts you just about 130, doesn't it? I mean, you could buy some time. But you know, really, there's a 5% difference in implied volatility between November and October. Here you're paying about $1. Here you're paying about $1.30. I'd actually probably buy some time. Here I've got a 43 delta. Well, actually, no, I'd rather do the 127s, to be honest with you. I mean, we're only talking about 60 cents away. So if you want, folks, I'll add it. If not, we'll pass. I need to get a kind of a hands up right now. Those people that are in favor, type in yes. Okay, those people that are, well, forget it. Everybody put in yes then. That's fine. Okay, I'm going to write that down. Costco. Oh, when are earnings coming out? Anybody remember? they are. Before market on Wednesday. Okay. Wednesday, 10:08 a.m. OCC 127s. All right. Excellent. Thank you, folks, for contributing. Alrighty, let's get to some trades. Jerry, I looked at all the ones that you had mentioned on the phone, just so you know. And actually, one of them I did like. And it's one that's coming up with earnings on Friday the 27th. Never heard of this company. Or this symbol, I should say. That's KSU. But I like what I see seasonally. Some nice consistency here in the last 4 years as well. I mean, it's a 90%er. It's got a really nice tight upward band, a nice roll pattern, which I like to see. There's an average potential move on the stock of 5.49. So I said, what kind of interest does this have? Now remember, Friday the 17th is expiration Friday. So this is a do or die type of scenario, just so you folks know. I am probably going to not put a lot into this, but I like what I see. I did some research in regards to, from a fundamental standpoint, and Kansas City Southern, there seems to be some very positive information about them. Analysts say to outperform, so that people in the know think that this company is going to do well. The other thing I did do, I believe I did this, is I looked at a 5-year track record, and this is one of the things you guys can do as well, and just looked at their quarterly earnings to see what happened. For example, last year, there was the earnings. You guys can see this a little bit, can't you? Where was their earnings? Uh-oh, I just lost it. Sorry. There's their earnings. Let's see, 10/18 before market. So you would have got in on the day before, which is 10/17, same kind of thing. It closed at 113.16, and let's just say you played one strike out of the money, or at the money, 115, let's say 120. There jumped up to 118, and then just went straight on up to over 124. So it made money that year. That's another thing you guys can do if you want. I've mentioned this several times. Just highlight each year and see what the heck it did. See if it popped. This year it was kind of on the 19th. They did eventually go up, so it's not necessarily one you're going to take off the table right away for a huge pop. Okay? So just keep that in mind. Don't want to belabor this too much. But I chose, let's look at open interest on this. I did, according to my research, OCC 125s. This one right here. For a pretty inexpensive amount. The other is a back spread. I've talked to you about this before. I'm going to be doing more of these things. As far as putting them down. Back spreads are easy to understand. You're buying two, offsetting the cost with one. It's still a directional play. There is some more risk, but there is some more profit. And if you look at the 124, 125s, that's where the interest is. It's not a lot, but it's 95 cents, folks. It's not a lot of money to shell out. You're buying the 125s, you're selling the 124s to offset the cost of buying two 125s. Your total exposure on that is $195, not a lot. Okay, so that's the one I put there. Target price on this thing is 127.52, and that will be included in the Excel notes. Okay, the one that I did like, though, for this week that's coming up on Tuesday, there's only three I had for earnings, and that's Yum Yum. Yum Yum brands, Yum Yum. They always tend to do good. It's a 90%er. Last year they didn't, unfortunately. But every other year before that, they did well. Where are they sitting at? Well, they're kind of meandering sideways here, looking like they're poised to pop up. Where are they? They really got beat down here and missed earnings bad here, crawling its way, meandering sideways. You see consolidation happening here for a good month. It's almost like it's flatlined. Somebody adds, thanks, Brian, for bringing that up. Somebody brought up the fact that last year, evidently, Yum had problems in China because of chicken problems. So maybe those problems are behind them now, and the chicken has laid some golden eggs for them to make money. If you look at some fibs on this, as well as look at some probability cones of where this potentially could go to. You'll find some interesting things, especially right here. You see how the 61.8 is at $77.66. Probability cone is at 78.02. Very, very close. If you're looking at November's here, which you can also look at OX. So let's take a look at both. Went down 25 cents today, not that much. From when I was doing research, I was looking at the OC 75s. Right there. 6,800 open interest, 319 volume, IV of 30. The delta was at 20 when I looked at it, because you guys know that's my minimum that I normally will do. But this is an earnings trade too, so I'm expecting a pop. And that's at the 75. This is 74.69, and that's 74.01. So I'm hoping a retracement to between the 38 to the 50, between the 74.01 and the 75.84 in this area, which is really about where the 200 is sitting at, maybe a little bit higher. Yeah, after close tomorrow. That's right, Wayne. Thank you. That's when Yum Yum is coming out, Tuesday, 10/7. Analysts say outperform. They like it. You can read a lot of good stuff off of MSN. I like the way they've organized stuff here. So I've listed that. You guys make your decisions on that. So you got KSU, YOM. I also did again, I'm also giving you guys a lot of choices here for different types of directional trades you can do. The OX 72.75s, 72.5, 75s. It's $2.50 spread. You see that between 72.5 and 75? It's only 72 cents, folks. That's fantastic. Usually I'm looking at a buck, buck and a quarter, buck 10, looking to at least make $1.25. I won't do it if it's more than $1.25. That way, therefore I couldn't get 100% of my money. Here it's cheap. It's real inexpensive. So you're not risking a lot. Your total profit's only 178, but you're only risking 72. So hey, double my money, right? Right. So right, Charlie. All right. Last earnings trade. This is a little bit of a controversial company, I know, for some people, Monsanto. This is about making money, though. It's an 80%er. And let's make sure I've got good data. Well, it's only 70 there. Oh, I think this is what I did. There it is. That's why I put January 115s for this trade. Even though it's an earnings trade that is coming out Wednesday the 8th before market, analysts are calling this a buy. You can read some of their articles. There are always controversy surrounding this company because of their genetic seeds, but that's a strong run upwards with a 90% probability, especially over the last 5 years. MON, looking at a retracement to around between the 38 and the 50 in this area. So their last high was here. Well, actually, the last high was here. The last one before that was right up here around the 61.8. This is just a 3-month retracement. Why is my probability cones not showing on this? That's interesting. Oh. There we go. Okay, so January, from a probability standpoint, 123.26, 61.8 retracement, 121.37. Again, I'm looking between here and here, and I'm looking for January, so I'm buying a lot of time on this stuff, folks, which saves you a lot if there's a mistake that happens on earnings. And I looked at Monsanto 115s right there. 24,254 open interest. Look at the doggone volume at the money 110s today. Guys, that's an anomaly. That's almost 6 times open interest, or at least 3 times open interest. Somebody knows something. It's very, very big volume here. Now, of course, you have short interest as well, but one of the things I lean heavily on is seasonality. So I looked at the January 115s right here, which I think is conservative when you look at the 38.2 retracement is 116.78. The probability cone is 123.26. Have you guys ever used the analysis tab? Yes, no? Anybody? No? Okay. Well, I've learned to use it. It's an okay tool. But I don't want to get into it now because I got other traits to go through. I've got about 20 more minutes. Somebody asked, is it too late to get into Google? No, it's not. Google's had a nice run. Oops. It's Google. No, it's Google. I've done my extensions on Google, and you can see we're looking at between 626 and 638. So if you look at trading Google, and you look at the 630s, even though the delta is very, very low, I'd be more apt to look at the, well, this thing has moved up too. But still, folks, I mean, Google moves and moves big. We're looking at what are we looking at for a 630? We're looking at a $42, $43 move. Come on, folks. We know Google does that kind of stuff. No problemo, as they say, right? 79 points. And again, the stock price was a lot lower. But if you use just 11.54 from where it's at right now, somebody says they live by it. Yeah, Google's is an earning trade, Brian. Yes, it is. And Jose, I will go over the analysis tab for you guys. I'm gonna spend probably the next time I'll do this. I'll actually spend like a half of the session really going over so you guys get it drilled in your brain how to use it. There's two parts to it. And it works, though, I'll tell you, part of the analysis tab works a lot like has this probability cone in it as well. It gives you a target based on one standard deviation based on current stock price and the Greeks of where the underlying security could end up at in on expiration Friday. Difference is it also has based on current if it pops, which is kind of nice to use when you're using it on an earnings trade. It's one of the things I'll show you how to do next time. So the question be, is it still okay to get into Goog? Yeah, absolutely. This is still a great looking trade. It has really meandered sideways here, folks. You can see that pattern. This is stuck in a holding pattern right now. I won't tell you what my son said, who works for Inside Research R&D for Google up in Manhattan. I've been sworn to secrecy. No, I'm kidding. But he does work for them. Yeah, I'll show you guys how to set. These are actually fib extensions right here. It's simply taking from the low to the high to the last close, and that gives you the extension. And I've blanked out the 23.6 and the 78.6 because those are not ones I use a lot. These are the ones that majority of people use for target prices for stocks, and I can go over that once for you. So yeah, I think Google is still a great trade, and again, there it is, 38.2, between 38.2 and 50 on a nice pop, and that's what I expect. The stock closed at 587. Looking at 11.54% average move. Simple math. 587.78 times 1.1154. Boom. So that brings you to 655. So there's different ways you could trade this. I mean, there's some people that buy the OX. It's not a lot of volatility, right? Most people, though, end up buying Novembers, only because you don't get punished as hard if the trade goes against you. However, you're going to have some pockets to play that. The 630s here is really, when I say pockets, it's actually extremely fairly priced, folks. And there it is, the 630. My delta is right above. You know, the next one below is 18. But I think most people would trade, Brian, to answer your question, the Novembers. Because if you take 580, just assuming you get the ask, divided by the stock price, of 587. This gives you your percentage premium you're paying of the option versus the underlying. 5.8 divided by 587, and we're not even talking 1% premium. If that thing pops hard, you know, we're talking that $5 being worth $20. It could potentially do that if the delta just starts screaming through the roof. So this, you know, buying some time, most people will play the one out, even though I know people that still will play this, but this is a do or die. You're risking a lot less money. There's no doubt about it. Earnings, notoriously and historically, Google is famous for coming out with earnings the Thursday after market before Friday expiration in October. They've always done this. And either you make a killing or you lose it all. I mean, it's as simple as that. Delta is not that important, folks, when it comes to an earnings trade, because this is either going to explode and your delta is going to go through the roof, or they're going to miss and you're going to lose whatever you put up. But to answer your question, most people will go out to November instead of the spot month. Anybody who's got volatility crush or missed on an earnings likes to buy a little bit of time. You can still spend the same amount of cash, in other words, out of pocket. You know, this one's $5.80. This one's $1.50. So you're buying $4 less than you would here. Okay, I hope that answers that. It is more of a personal preference thing. Let's see. So I went over Yum, I went over Monsanto, I went over KSU. Let's just look at some seasonal longs. Now, I know one of our members has discussed this, and there is that rumor out there that oil may be in for a longer haul before it pops up because of the infighting that is happening in the oil industry. I think there's some truth to that, but I think it's more technical and seasonal time. I think oil is still a potential buy. Some of the big boys, including Mother Merrill, has looked at some of the energy stocks to see which ones are going to be good plays. I looked through those as well and came up with 3 that I think are potential stocks to buy for a rebound in oil on the energy sector. And one of them is CXO, which has also got earnings coming out at the beginning of November, so keep that in mind. Uh, 6 out of 7 year, it's gone up. It's, of course, very beat down. So if you look at a November on this, at 132.57 is very close to the 50% retracement from its high to its low. We got a 6 out of 7 year probability that it does go up. I was looking at November 125s. This is the only problem I have is if only half the people that are signed up to this webinar buy 2 to 3 contracts each, will all exceed what the current open interest is on that. That's a little bit of a concern I have, that, you know, we're going to end up buying from each other. So I also looked at January, buying some time. The 120, 125s, bull call, which you can get for only $2, which is really nice when you can get a $5 spread on a bull call for that price. It gives you potential of more than 100% return on your money. It's potential 200 to make 300. Again, concern is low open interest. But it is one of the stocks that was mentioned by Merrill Lynch as a stock there's some interest in from institutional level folks. So it's not, them just going out and touting something. It's from an institutional standpoint. There's some players that are looking to come into the game for that. The next one out of the three that I found is CLR. Again, very beat down. Just had a stock split. From a seasonal standpoint, though, once again, can you guys see this? I've kind of shrunk this. Oops. There we go. 6 out of 7 years. Average move of 8.43. And this looks like a clone of CXO, guys. It's kind of stupid. Again, I looked at the Novembers on this. Any one of these three, depending on your risk adversity, is usually target prices that people without seasonality are using the formula that we've all learned. But look how beat down that DPO is, folks. It's almost ready to turn up. And Bob Adams, you know how strong that is when a DPO mobile is beat down like that, ready to turn. And if we have the hull that starts to turn up, and we can get in on the early start of this thing, and the ride pulls up, that's a great trade to be able to time. So CLR, I looked at November 65s for $1.45. I think that's pretty inexpensive. Oops, I'm sorry, this is AUK. Novembers. You got a 47 delta. There's only 190 interest in it, but again, a reason I'm buying time with this, guys, is I don't know when the move is going to start yet. Okay, as I told you in the beginning of this session, whenever I look macro picture and I still see this kind of thing on all the indices, I got to have some kind of confirmation the market trend is reversed and going in a positive way before I'm going to start to position myself into long positions and take advantage, because we all know that 85–90% of the market or stocks move with the market. So that's why I'm buying some time on this rather than you saying, well, gosh, Gary, $3.30 on a $63 stock, you're paying a 3–3.5% premium. Yeah, that's right. I'd rather pay a little bit more premium, have a higher delta, but buy myself some more time because this market still hasn't quite turned yet rosy enough for me to feel comfortable. Make sense? Okay, last one of the three is WLL, Whiting Petroleum. This one is an 80%er. And these, could I say all of these are marginal trades? Not really, folks. These are energy trades that when this market turns around and oil starts to rebound, which it will, I think this is part seasonality, part infighting. I think this thing will start to turn. And listen, the economy loves it. When we're saving money at the pump, we tend not to put that money in our pocket or into savings. We tend to go spend that money. And that's why the GDP loves it when oil prices are down. But who doesn't like it, folks? All the stockholders. So, yes, Bob, you do want to wait on all of these, and that is under my comment section in the email for the recap. That's exactly what I am saying on all of these trades is, wait for market trend to reverse, okay, on all of these things. So, But, you need to start paying attention. It should be in your radar is all I'm saying. It should be on your radar. It's always good to be advanced noticed. But once again, this looks like a clone of CXL and CLR. I mean, these are all clone-looking pictures. But the trend, folks, is up on every single one of these stocks. The trend is up. They've just been beat down. So let's see. I was looking at November, 77.5. There is November right here at a 50% retracement at 81.86. This is 82.82. So, looking at the 77.5s, which is actually what we're looking at for October on probability extension, is being very conservative. And this is what we're looking at here. It's gone down a little bit. But again, this is doing the math. I don't want to go through this exercise with each one, but 5.29, if you take that and multiply it by this, where does it put you at a target? Where does that target sit in regards to Fibonacci retracements and probability cone extension? There's three things from a technical standpoint I'm all going to look at. Then I'm also going to look at IV. I'm going to look at delta. I'm going to look at, open interest and volume as well. I looked at a bull call for a January. Once again, on all of these, folks, these three energy plays, you can look at the January bull calls on all of this. A, buys you time. You don't have to micromanage them as much. They're inexpensive when it comes to a $5 bull call spread, as you'll see, even with Whiting Petroleum, the 72.5, 75, 77.5 is still inexpensive. You can still make more than 100% return on your money. If you spend $235, you can make $265. So all of them, for buying so much time in a bull call, you can make more 100% on your money, and you buy some time rather than buying the November expiration. But I threw the Novembers out there as well. Okay, some ETFs that are historical shorts or historical longs and shorts. FAS is a historical long right now, 5 out of 5 years, with really good double-digit movements in the last 3 years. And of course, it is sitting at the bottom, and it started its way up with a nice looking trend upwards. You got a MAC that's starting to pull up. That's some best choice perspective. And from a Thinkorswim perspective, I don't know why I used this instead of a 3-month. I used a 6-month for some reason. Why do I have 2 fibs on here? It's interesting. Brian, this is for your edification. If you want to see how I do this. There's the cones. You go to drawings, Fibonacci. Oops. This one we're going to do extensions. You take it from the low to the high to the recent close. And you can make a more specific, you can tighten them up, which I always do when you edit the properties to get exactly right. That's 112.70. I'm real anal at that point. But it's usually very close. Mid is, and this is beginning point is 50. And then here on this one, you have to visually look at the close up here. And we're looking at 103.69. Gosh, compared to how I felt yesterday, guys, I'm surprised I'm doing so well. So you can see the 38.2 is 111.79, and this is 112.08 on the probability cone. and this thing's a huge mover. I put on FAS a January. Again, I bought time on this, guys, because I don't know when things are going to start pulling. January 120s. So that's a big move, guys. That's $17 move, right? That's a lot. So that's why I bought a lot of time. But historically, it's got a huge potential of moving. 17.1%, folks. 13, 11, 37. I mean, that's big. You know, even if you used, 12% instead, which I never do. I'm always using the exact figure best choices got. 10% on $103 is 13, $10 puts me at, right, 113. So, anyways, that's where I chose the January 120s. The bull call, though, you can buy really cheap, also January. And look at that, only for a $5 spread, the 115, 120, you can buy for 122. It's really inexpensive. Okay, one more ETF on the long side, and then we'll throw a couple of shorts in there. Again, it's these are ETFs, but they have big moves. There's only 5 years of history, and this is kind of quirky. 12 was a bizarre year for a lot of stocks, though, in October. 2012 was a really, really weird year. Where is this sitting at now? It's sitting way at the bottom of its historical movement. And then, of course, it's beat down here. It's starting to pull up. A little bit of curling of a MAC. So we have a historical potential move of 15.77. I guess I didn't do anything on this, or did I? Why is, that's pretty weird. It's not showing this. Sorry. There we go. All right, Brian, once again, I just showed you how to do extensions. This is how you do retracements. You just go to drawings, click retracements, take the high, make sure you've got your settings to where it shows the high to the low, and then you can match these up with the cones, and you can see where there's a 75.2 in November, and there's a 74.33 at a 61.8, which is a really significant fib retracement, where usually there's a lot of resistance. You can see it's way beat down. DPO tried to pull up, but got pulled down a little bit. So it looks like this thing is going to pull up. We had a 15.77 historical potential. I looked at November's on this because it seemed to be priced right, evidently. November 70s. Yeah, I've got also the most volume today and almost the most open interest. Fairly priced. It's about under 3% if I can get it at the 70s. And, if the math of 6230 times 15.77 puts me at a target of 7212. And when you look at these fib retracements and projection cones, that's between the 38 or the 50 and the 61. So someplace between the 50 and 61% retracement, if I'm buying November, seems very, very probable for me. Okay, you're welcome, Brian. Hold on, I got a cough. Oh, God, I'm surprised I've made it this long without coughing. My apologies, everybody. Okay, that's what I have for longs. Just a few shorts I'm going to throw in here. And again, these are the opposites. These are ETFs. They're all the opposites of FAS TNA. The opposite of FAS is FAZ, and it just works the opposite, folks. 5 out of 5, 16.61, big movers, 13, 10, 35. Those are huge moves. Since it's getting running a little bit late, I'm not going to go through all of this. But what I looked at is the, let's go to the charts, FAZ. I don't know why it's doing this now. Sometimes memory gets low. I've got retracements. I guess I didn't do this on here. Actually, what I would do is extensions on this instead. Oh no, I had it right. Sorry. Oh, you know why? These are puts that I'm looking at. Silly me. I should have done extensions on this and not retracements. Anyways, I won't go through all the math on that because it's running late. You guys can kind of play with that. What I did look at is the strike price of a January 15 strike, FAZ, the 15s. Right there, 2,266 contracts for 89 cents, buying some time. Or bear put spread at the 15-14s, buy the 15s, sell the 14s to offset the cost. You can pick it up for 38 cents. It's only $1 spread. That still means I'm making more than 100% of my money. It's the only way to play these ETFs on any kind of spread. So you got to go with $1. You can't go 2, you can't go 3, you can't go 4. They're priced bad. So you have to go dollar spreads. You look for that spread where you're going to make more than, if there's only $1, that means I got to pay less than 50 cents for my cost basis. Otherwise, it doesn't. The risk reward isn't there. So that's what I looked at FAZ is the 15-14s, 100% probability. You guys can look at the target prices that's in the spreadsheet. TZA is the opposite of TNA. Once again, these are all opposites, but they're movers. TZA, I don't know if I did any. Oh, I did. Okay. I put the November 15s, so right in between this area here, down in here. So it probably is around the 78.6, I would think. If I added this, 78.6. Yeah, there you go. 1452 to 15, right in this area here. And I picked the November 15s on this one. Oops. November 15th, 1,279 open interest and volume of 125. Last one for a short. If this market continues, you guys remember you can make more money quicker on these. So always keep these in mind. Don't be scared to trade them. Just, dip your finger in. Don't play a lot of them. They're 100% movers. SPXU, and that's the Ultra Pro short of the S&P. That means this makes money going up when the S&P goes down. So we're anticipating again for the market to pick up here in the next week or so, which means this is going to tank, and that's how you can make money on shorting an ETF that makes money off shorting the S&P. SP SPXU. I guess I needed to put in, I don't know why these probability cones is not showing for some reason. There we go. I put the December 40s, and this is projected to be at 37.47 in December. So that's in between the 50 and the 61.8 retracement. Not a lot of volume on this though. 742, it's where the most is though. You could pick it up for 95 cents. Or you can do a bear put to the 42.40. This one I did a $2 spread and I found out that to be the cheapest. 80 cents on a $2 spread? Hello. I'll do that. I had to play with all these to find this pricing, just so you know. It means you risk 80, you can make 120. So that's 120% profit on your money. If it works out. And with that, I am done. Any questions? No, yes, no, yes. Any stocks you want me to go over before I leave? All set? All right, folks. Appreciate your attendance. Thanks for the support. Good trading. Be careful in the markets. God bless, and we'll talk to you guys next time.